Is the cost of money going to be a problem, Mark?
I think people are feeling like that way in the short term. I'm not sure if we're getting to this kind of breaking point of yields high enough to, properly hurt the stock market. Sure, we're having a little bit of a pullback today, a little bit of weakness, a little bit of risk aversion that definitely seems to come as a result of the bond sell-off story. But you got to put it in context of a little bit of summer liquidity, summer news. I actually think that suddenly so many people are talking about the steepening yield curve story, the higher long end yield story, that I think this is probably the point where you start kind of seeing, some buyers come in and snap up those yields for long-term investment. I wonder whether, in fact, we actually see the curve flatten a little bit in the short term. And I want to emphasize that short term because this is a story about people being worried about higher oil prices, but higher oil prices feeding into and downstream fuel products where the spreads are getting even wider, that being an inflation story. And so people are getting very kind of concerned about. So if this is an inflation story, well, maybe we start seeing a little bit of flattening from here with front-end yields come a bit higher. We get a little bit of people seeking to kind of tap into those higher long-end yields at the back end, and we get a pause short-term. I keep on repeating the word short-term because longer-term, as you know, I think yields globally at the back end are going much higher. I think we've got a lot more curve steepening to go, but these things never go in a straight line.
I'm kind of wondering what's changed today in terms of, we know inflation's been a problem for a while, we've had multiple supply shocks. Is it that focus on the refined product? Is it this idea that yields were already high and we're just worried more generally?
It's a great question, Skylar. We were asking this ourselves this morning on the desk. Why suddenly today? And it was weird. In my chats and in my inbox, it was clear that over the past maybe 24 hours, the attention on those kind of end products and diesel and gasoline really kind of seems to intensify. And this has been a gradual story. Now, part of it's because we had fresh size and scopes and some of these spreads reaching real records. And people are going, hey, wait a sec. Consumers are getting really squeezed here, even though oil isn't at fresh high. And that comes the backdrop that, well, actually, crude prices are also going a little bit higher. So spreads are going at records while crude prices are also going higher. There's no sign of respite on the Iran front. So yes, people are getting concerned, just a marginal nudge in that story at a point when yields are at, fresh extremes as well. So it does seem like really it's an incremental nudge, but yeah, people are certainly much more worried in the short term.
When do these yields become a problem for stocks, Mark?
I don't think so yet. Like, obviously, every time they go a little bit higher, it raises the cost of money a little bit more. As kind of Guy asked at the start, it lowers the discount rate. It's a problem, for stocks. But I don't think there's any level anytime soon, which is a breaking point. It's about pace. If we keep on accelerating higher from here, stocks are going to worry. But I'm not convinced we are ready to accelerate higher from here.